So what does this mean in terms of your performance as a company? It's been rumored forever that Citadel Securities would seek an IPO at some juncture. And so is this helping you kind of grow your margins much faster into a moment like that?
So there's two things. Well, first of all, we'll make sure Bloomberg is well informed if we ever seriously consider IPO.
Are you seriously considering an IPO?
No. And you all will read it on Bloomberg first, I'm sure. Putting that aside, I like how you slipped that in there. As the largest designated market maker on New York Stock Exchange, as someone who just took this American aerospace company that we mentioned earlier, IPO last week, with a lot of excitement and pride, we need to see more IPOs. Okay, and we've seen way fewer IPOs than we used to. And the leading reason companies are no longer going public is, on the one hand, they find it easier to raise capital privately. On the other hand, the negative side effects of being a public company as a result of regulation like the ones you're mentioning that's happening to Google right now, it's giving people longer and longer pause. Right? Until that changes, it probably also means next time when you try to ask me, when you ask me whether we're going IPO or not, the answer will continue to be no. So, so from that perspective, we remain concerned about the overregulation and this negative attitudes towards corporate America. As someone that's whose business is very much dependent on transactional volume, we certainly like the fact that things can transact more with less friction and going back and forth. We like the fact that it becomes possible for things to trade cheaper for our clients. But at the end of the day, when your tick size gets too small for too many names, then the amount of liquidity that can be displayed at any given time, and the best bid or ask, it becomes smaller with it as well, right? Your tick increments get smaller, top of the book also gets smaller. That makes it hard for institutions who want to transact large sizes when they go to the market and say, hey, I don't see as much liquidity as I normally see, and that become eroding large size risk transfer and liquidity transfers, and that then go upstream and give companies pause when they start thinking about, hey, if I go public, will there be chunky, large liquidity available for the ultimate institutional buyers of my stock? So going back to the basics and start asking questions in terms of market structure, in terms of regulation. We're doing these things, we're proposing these rules. To what end? To what end? It ought to be either we have a theory around how the investor is going to be better off, we're protecting them somehow in ways they actually care about, or we're facilitate better and more efficient, more transparent capital formation.